trust your crypto assets to centralized exchanges that actively sell your private information and front-run your trades? Would you like to buy and sell your assets without any middlemen, intermediaries, or robots? Do you like paying slippage, fees, and having the price go up as bots steal from you on low-liquidity decentralized exchanges? The solution is nodemarket.io. Set your guaranteed buy or sell price. No middlemen, no slippage, no bots, ever. Buy or sell 1, 10, or even 10 million tokens, and you never have to worry. OTC trades are between you and the seller or buyer, guaranteed by audited smart contracts and no human middlemen. Nodemarket.io.
Ooh, that's a good one to leave it on. Okay, give me 2 seconds. I'll be right back. I gotta flip something over that the cat just destroyed. Well, I tried to bring over, but he ain't playing ball. He's just too big now. I can't catch him. If he runs, that's it. And now his new thing, which he thinks is real funny, is he likes to go and flip all the trees over, anything planted, he likes to flip it over and then run. He thinks that's real funny. So I guess I got to go to all fake trees, because otherwise they'll just leak water out everywhere. Ugh. Anyway. Hey! Little son of a gun. Anyway, okay. So let's get to, let me get to the rest of the comments and say hello to everyone. Hello? 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 Oh, you know, Howard goes in and out. So we'll see Howard in a few days, I'm sure. Hello? 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 And hello. All right. So here's what we're going to talk about today. We're going to go and we're going to compare SUI and Aptos Well, we're not going to compare. Somebody did the comparison for us, so I'll go through it. We'll see if we agree. I've got a breakdown of all the sketchy crypto news over the last few days. And then just real quick, everybody's like, DeepSeek, it's amazing, it's cheap. It's cheap. It is cheap. But their benchmarking is pretty bogus. So remember when they were developing the model, they couldn't run the model to benchmark. So what they did is they targeted a couple of the benchmarks for O1, very obscure. Basically, DeepSeek does really obscure stuff good, but not as good as you would think. It's sloppy in many areas. Its benchmarking is not great. It's just that it's real cheap. And if you're using AI a lot, or you have apps that are using AI a lot, I mean, it makes sense that you would want to, set up something that's pretty cheap. Do you trust running your AI infrastructure, your AI plumbing, and plugging it into China? Well, that's what you're doing. I mean, I don't know. I don't know if that makes a big difference these days because all of our everything is everywhere anyway, but I don't know. But anyway, a lot of people were making these very big, dramatic proclamations because of, DeepSeek, it only costs $6 million. Dude, it benchmarks awful. When you put it up, anyway, so it caused this huge sell-off in NVIDIA, which kind of worked its way down to crypto and all this kind of stuff. And no, some other people had, this makes Ben's case more stronger. Like, now that Ben was saying maybe the little guy can compete. No, and no. It's like saying that, yeah, a Corvette is just as good as a Ferrari because it's got the same horsepower. Yes, you can put a big engine in a plastic American-made piece of crap, and you can die. Man, if I told you all the how garbage a Corvette is, it's like the American Ferrari. Nope. No. You know what an American Ferrari is? When an American buys a Ferrari, that's an American's Ferrari. There is no other Ferrari than Ferrari. There's no other Rolls Royce than Rolls Royce. So these nickel and dime large models will be good for a lot of people. They'll be great for a very few people. They'll be incredible for no one. So, I mean, cool. It further democratizes AI. It makes it where you can build software and stuff that AI could plug into, but not in any kind of meaningful way. So, yeah. Anyway, keep that in the back of your brain box. All right. If you have any questions, feel free to throw them in there. Let's see. HYPC can connect all of them so that you have yeah, maybe. Yeah, because it's like a gateway. It's like a network switch. I was told by the team at Libra that I am allowed to share Libra stuff. So why don't we do some Libra news? Hold on, let me find it. Let me get to it. We're supposed to have another meeting on the token launch here pretty soon. Where is that? He just hit me up this morning. There it is. Let's see. Is that something I can share publicly, or does that need to stay internal? Okay to share. Okay, so here's what's going on. This is the Libra news. I mean, I can't really put it in the chat because there's too much stuff. But for those of you that don't have this, Libra, the token Lib, on Node Market. Matter of fact, I'll show you just real quick on Node Market. Go here. It's the InLib token. It's this one right here, which currently priced around 4.5 to 5 cents. Anyway, that one right there is what I'm referring to. So that's the proxy token for the not yet launched Libra project. So this is from the top dog. All right. Libra is entering into 5 partnerships to deliver a global solution with a large vision model for retail, which transforms how global consumer brands and global consumer goods brands manage trade promotions in markets with 3 billion consumers. These partnerships will provide revenue and data to position Libra as the or one of the leading providers, making $1 trillion of invisible commerce visible as follows. One, former joint venture of Kartini Indonesia, now acquired, providing 1 million ARR with rapid growth and trade promotions, as well as IP. 2, agreement with major Latin American retail networks, starting with 25,000 merchants in Mexico, and in March, that should be rolling out and scaling thereafter to 30 markets and 1 million stores. 3, agreement with a leading Malaysian-based Pan-Asian merchandiser, starting with 20,000 stores and expected to scale to anywhere from 3 to 5 million merchants within 2 years. 4, they have a potential agreement on the table with Northwest Africa, which is 350,000 stores, and that negotiating is ongoing. In the Middle East, they have direct agreements with major companies such as Colgate, Unilever, Abbott, Philips, and they have partnership agreements in place to scale to at least 1 million merchants. So let's see. They said with revenue at $1 per merchant, $1 USD per merchant per month, per consumer goods brands through the Libra display AI and related products. We expect at least 20 brands per country at 10 million merchants across the partnerships, leading to 2 billion USD annual revenue within 2 years using the lifting mechanisms. Phase 1, merchandisers and corporate brands, Salesforce input sales or SKUs, working now and generating over 1 million ARR with growth plans in place prior to phase 2, which is crowdsourcing tokenized rewards to accumulate greater than 2 million images per market, resulting in a dynamic view of all ambient, chilled, and fresh products in each market, allowing any merchant to do a stock take with the Libra large vision model in 10 seconds or less, and automate trade promotions and product replenishments, eliminating hundreds of billions of lost US dollars in sales globally. So 100 billion in lost sales, many hundreds lost sales. Yeah. Let's see. Denny, where you been? Denny, you've been asleep at the wheel. No. We wouldn't be talking about InLib if Libra had already launched. Come on, bro. No, nothing has started. The closest thing we know right now is going to be GMRT. We also have that proxy asset I'll show you. And we know a couple of things about GMRT. One, we know that the token will open at 12 cents. Okay, so that's pretty good. Everybody basically gets the opening price, but you don't have the position limits. So that's one of the things that's kind of cool is if they're launching at 12 cents on the launch pads, a lot of the launch pads, they restrict and they have where, you have cliffs and things like that where you get 10, 15% of your tokens, 20%, and then you have a 3-month cliff or whatever, and then you have monthly vesting. There ain't no monthly vesting here. All of the gamer tokens that you get here, the GMRT, GMRT is immediately transferable on day 1, which is looks like it's going to be the 11th of February, unless something changes. It's going to be the 11th of February, and at that point, you have all of your tokens right then. So that's kind of cool. So yeah, we don't like lockups. No lockups. Once Lib launches, is there a lockup? There is not a lockup for any of the digital private clients or anything like that. Anybody, if you have any of these N tokens, they're instantly usable on day one. Okay. So, meaning you'll be able to swap them for the other token. You'll be able to swap in GMRT for GMRT day one. You'll be able to swap in Lib for Lib on day one. So there you go. Where can you find the address? What do you mean? Do you mean the address to add it to your wallet? If you go down yonder, token listings, you click on token listings. Boop. Oh, I don't want to open mail. I don't know why it's doing that. Anyway, normally, this must be my computer doing some weird stuff. Wants to open. Yes. Opening mail. What the crap? That's a mistake. I don't know what's going on. Don't save. Well, that would be a bug. We will report that. Normally, when you click on token listings, it doesn't ask you to open the mail app. You know what? I'm going to text Brandon. I'm going to text him because that's weird. Let me just, while it's on my mind, because that's so weird. Normally, that's where you would go. Hey, check the listing button on the website that wants to open mail app. Okay. Hopefully we got that sorted. Anyway, normally you would go right there to token listing. So for whatever reason, at least on my computer, it's being weird. And I have a Mac, but I don't think that should make a difference. Yeah. So that's where you would go. Like GMRT, you would go there. There may be another way to add it. But anyway, that's normally the easiest way. So you have the contract address. Now, let's see who to thanks for all the NT. Well, the way we set up these N token launches is we ask the teams if they're willing to do it. So if they're willing to do it, then we kind of discuss all this. So the digital private clients got in early on a lot of these projects, and they're locked up though. So they'll get some tokens on day one, but most of their tokens are locked up. It works on yours. I don't know what's going on with my computer. My computer being wacky because every time I click it, it tries to open Brandon's. It opens an email to Brandon. Let's see. Oh, maybe I touched the wrong button. Oh yeah, token index. Sorry. Okay. I guess token listing. It would make sense that it would go to. It would be an email, wouldn't it? Okay. So you would go to in GMRT and just click add to MetaMask, or you would go to InLib, add to MetaMask. You would have in the past used InTwin, add to MetaMask. Now, these two, once day one happens, which will be, day one for Gamer Token will be February 11th. And day one for InLib, we don't know yet. We're supposed to have another call on that. So you will just do it that way. Yay. And you guys know, don't ever send any currency units to a token contract address, right? Because if you do that, it's gone. See you later, bye. Gone. So don't send to a token contract address. But anyway, the way it works is we work with the teams to do an initial investment. And once we've initially kind of invested in the project, we say, hey, listen, there's some time between now and your launch. Hold on. So, if there's, let's say, a couple months between the launch and right now, but people would like to have access, then we look at doing a proxy token listing, and they're using that information to kind of figure out what they want to launch the token at. So they can see, okay, if people are willing to buy the token and trade it around 10 to 12 cents, then they can launch at 10 to 12 cents, and they don't have to go launch the token for 3 cents at these launch pads that pull all these insurance scams. So like a lot of these launch pads, why the tokens are not doing well right now that launch, you guys have probably seen this. They have these special insurance policies where if you want to, like if basically a get out of jail free card, let's say that the token doesn't moon on day one, you can get your money back. You don't actually have to take possession of the tokens. So let's say you paid 5 cents a token and the token sits at 5 cents on the launch. You're like, I don't want it. Then they just give you your money back, which is insane. So I don't even know what you call that, kind of gambling insurance or whatever. Anyway, the launch pads are doing this because launch pads are probably not doing as well as they used to do. It's certainly not, it's not 2021. It's definitely not 2017. So these companies they're not making a lot of money. So they're just trying to do anything they can to entice people. Use my launch pad because we'll give you a get out of jail free card. No, use mine. So for people that I guess don't really want the token, but they kind of want I don't know, whatever. It's kind of stupid. It's basically geared towards people flipping the token that have no desire to use the asset at all whatsoever. So they're catering to basically just the next layer of degens, just the kind of the lowest common denominator. Anyway, weak investors, weak hands, things like that. So, yeah. Anyway, these listings, these in listings, the kind of the node market GMRT and the node market Libra and the node market Twin inform those teams. They give them a lot of market information. Now, the Twin team did not listen to us. They looked at all that market information and they did other things because I guess they were listening to lawyers or whatever. We don't know. And they hit a pretty bad launch of the token. But on the other side of it, at least makes it cheap for people that want to build their twins. And again, once their studio rolls out and you'll be able to build your twins, then it won't be a big deal. But right now it's frustrating for people, but we're still early into it. They only launched the token in October, the twin token. So I think it's been exactly 3 months, right? So, right, November, December, January, right. Anyway, so we'll see. But anyway, with Libra, there's a lot going on there to be excited about. And with the Gamer token, there's a lot going on there. Both of them, by the way, are in discussions with Hypercycle to do various rollouts, basically use or leverage Hypercycle nodes to decrease the cost of running their AI compute, especially the game company TGC with their Gamer token. They did some math and it seemed that if they got to the kind of success that they hoped for, it was going to cost them a lot of money to run that AI compute. And so Hypercycle is going to be able to reduce those costs pretty dramatically. So they're working on that behind the scenes. They're having a lot of meetings. Yeah. So everything is good there. So that's kind of where we're at. And that's why they do that. And also it's more money for the teams that they don't have to give away to launch pads. Launch pads, they screw you over. Launch pads are all about the pump and dump. They do not care how the token does. They don't care about the community or anything. They just want that quick one pop first day. They hope the token goes up so that people don't use the insurance policy and just don't buy. I think these launch pads are slowly dying. I think they're a relic of a few years ago, and I think they will go away. That's just my feeling. I think there'll be more DEX-based launches. You could see launching a token like on Jupiter or something like that, or in those kinds of ecosystems, rather than this whole launch pad spammy ass Twitter markety bullcrappy kind of system that we have now. I think it will go away. Anyway, that's my take on it. So yeah, there's that. So anyway, Libra is the next one to come. GMRT is the next one to come, and that will be the 11th of February. Again, tentative, but that's what they're saying, which is not very far away. And then that will be at 12 cents, except that people on launch pads will be locked up and you will not. That's good. Yay. All right. Will there be rewards pools? Yes. I don't know if it's day one. I hope it's day one. They're supposed to be talking back and forth with Brandon on that. We will see. We shall see. All right. When the hardware providers are available at no market, do factories still need to be tilling on HyperPG? Well, no, that would be your hardware. Remember, you're using HyperPG's hardware for now. You wouldn't be, I mean, tilling is in effect leveraging other people's hardware. You wouldn't be tilling on one piece of hardware and using hardware from someone else. That's the same thing. Can you briefly explain why some people need to connect tilling? All my node factories are tilling. Do we need to reconnect? You don't need to do anything right now. So I don't know what random people are. I don't know what their situations are. I don't know what to tell you. To each their own situation, I suppose. Let's see. You paid one. Oh yeah, that's a good price. You got Twin for a penny. You're still doing good. Did they already create reward pools for Leeb? Yeah, not for in Leeb. There's not reward pools for in Leeb. There will be reward pools. They're already built for Leeb, for the Leeb token, which is for Libra. And those will be day one. So basically day one, you'll be able to claim, you'll be able to swap your in Leeb for Leeb. And then you will be able to put it into a pool, and that pool pays 25%, which is pretty badass. It's a 25% APR pool that pays, I think it pays like in depth, like it starts paying, and it's based on the block, so it's a slow distribution, like a drip distribution. But you don't have to like wait for a set day; you just get it, and you can claim it whenever you want. However, there's a 30-day cooldown period. And you're starting to see that a lot in most of these, like Jupiter is the same thing. Graph token to a similar extent. You have a lot of these that have about a month, anywhere, 13, 21 days, a month of kind of a cooldown. I know that Fetch was a long cooldown. I feel like that was also 30 days. Maybe it was 21 days. It was pretty long. Anyway, yeah. Let's see. It seems that you lost your shirt swapping in Twin for Twin. I should have left it alone. Well, not at the time that you swapped. I mean, there's a lot, Bill. There's a lot in there that we could unpack. I'm not sure. I'm not sure. Do you mean you swapped wrong? You made a mistake? You used the wrong deck? So like there's 100 reasons why that could be true or false. I don't even know where to start. Let's see. With the loosening of government restrictions on crypto at large, do you see exchanges like Coinbase, Kraken opening to launch more experimental tokens? No, they're always just basically doing. It's a cost determination from them. They don't really. It's not. Nothing's an experiment for an exchange. They're getting paid listing fees. You guys know that, right? Exchanges get paid to list projects. Oh, we don't take fees. I mean, if a company should offer us, we would discuss that, but we don't outwardly charge a fee. Yeah, they don't outwardly charge a fee, but if you don't give them $1 million, you're not getting listed on Coinbase or more. Period. Full stop. Ain't nothing. You have to give them a big pile of tokens. That's theirs. They keep it. So it's like, ain't no one rides for free. Okay. Yes, 25% is the Libra pool, and it's likely that will be the same for Gamer Token, but we don't know yet for sure until everybody agrees. But we set up a separate group for that, and Brandon's dealing with them in real time about that kind of stuff. All right. I bought InLeeb, but I can't remember what to do next. How do I use the InLeeb address you have? Donna, did you already add it to your wallet? Is it in your wallet? If you bought it, it's in your wallet. This is just if it's not showing up in your wallet, that's how you would add it to MetaMask. You don't do anything with it right now. Nothing. All right. Nothing. Or you're saying there's nothing in your wallet? Add the contract address and it will appear. Also, normally MetaMask will scan for it every few times you open it. Okay, let's get into some news. So, I'll let you guys choose. Do you guys want to do the comparison of SUI versus Aptos first, and then get into all the sketchy crypto news second, or sketchy crypto news first? I will take the first 10. Donna, I feel like maybe you're a little bit behind the bell curve here. You see on the screen where it says add to MetaMask. You click that. It's added. You click like 2 buttons. There you go. Okay. Oh man, this is a good fight here. Let's see. SUI, sketch, SUI, sketch. Oh man, I think sketch is up by 1. Sketch is up by 2. Sketch is up by 3. SUI up. Sketch is up by 2. I need a decisive victory. Let's see what Georgia says. It's dead nuts even. SUI. Okay, we're doing SUI and Aptos. SUI and Aptos game. Sketchy was winning, but it gave way, you know. Okay. Let's talk. Here, let me just do some cool music. Let's do some, I think this is intrigue music. Okay. So here's the thing. Let's talk SUI versus Aptos first, and then we're going to get into all the sketchy news. So this is a person's rundown of SUI versus Aptos. But since a lot of people on the Twitterverse and everywhere else are making the comparison of SUI is the next Solana, then it probably makes sense that we should talk about that. So we had started to notice this a few months ago, that it seemed like SUI was, I mean, for a lot of reasons, a lot of it is the sketchy scumbag VCs that are supporting it are the same sketchy, should be in jail scumbag VCs that were big in Luna, that were big in UST, that were big in FTX, and that were big in Solana. Surprise. So anyway, SUI and Aptos themselves have a lot in common. Founders from the previous project, they came from the DM stablecoin that was really, I don't call it a failed project. It was a project that was never allowed to launch, right? That's when all the senators and congressmen stood up like, no, we ain't going to have Facebook giving out home loans and things like that. So that pretty much killed the DM project. Okay. Taking a look at SUI, it's pumped 136% in 3 months and 318% over 12 months. Then you look at Aptos, it's minus 12% over the 3 month and up less than 1 point over 12 months. So SUI is at least in the socials giving Solana a run for the top alternative layer 1 asset outside of Ethereum. It's possible that SUI could be the Solana of the 2025 bull run. And so then you say, okay, well, then we probably need to compare and contrast SUI and Aptos. Like, where is your money best spent? Or at least, how would you weight those investments? So both SUI and Aptos have DM founders from the aforementioned Facebook project that didn't get off the ground. Both use the Move programming language. And they're generally respected technically, right? It's not like it was with Solana where people were like, this is bull smoke. They're getting their transactions per second by just plugging 2 computers in next to each other. They're not really running across in a real environment. Anyway, so you say, okay, well, why is SUI doing so much better than Aptos if they're basically kind of the same? So you think, well, if you miss the SUI train, could Aptos be the way to catch back up? So before we get into the comparisons, like their launches and things like that, one of the things that probably holds SUI back, let me go over here to these markets. Sorry, not SUI, but one of the things that probably holds Aptos back is the high sticker price. I mean, the fact that it's $7 and the fact that SUI is $3.78, it just looks like, well, I can get more SUI for my money. And for a lot of people, that's sufficient. But right now, it's trading almost at a third as far as market cap. So you kind of have to factor that, but most people don't. Here, let me make that bigger so you guys can see it. Anyway, a market cap is something that most people just don't understand at all. They don't understand that if you take the total circulating supply and you multiply it by the price, you get the market cap. And the bigger market cap is harder to move. I mean, again, if all things were equal. So let's compare some kinds of metrics of their blockchain. Let's look at their mainnet launch. SUI's mainnet launch was in May of 2023. As a result, it's still going through its first bull market now, and it's doing pretty good. Since their mainnet launch, early holders are up 226%. Woo-woo! Aptos launched in October of 2022, so they had a good 7 or 8 months in advance. So this is Aptos's first bull market as well, but they had the added challenge of launching during that really bad end of 2022. Remember, 2022 was Celsius goes down, Three Arrows goes down, Voyager goes down, BlockFi goes down. I already said Celsius, but I got to say it again because Mashinsky's such a piece of garbage. Goes down, FTX goes down, Luna goes down. It was a tough year. Three Arrows, Capital, Kyle Davies and Zhu Shu, those douchebags, scumbag, effing thieves, they go down. Of course, neither one of them apparently. They're playing hop and skip, and you can't extradite me. All that crap. All these guys are going to end up wrapped up at some point. Anyway, so Aptos launched into that, and that's just a rough time to launch. They were plagued. Anyway, its holders have seen a kind of 20% ROI because its bear market low was 321. If you say from its low, it's up 170%. I mean, I think I got into this in the high fours. And then I had a pile that I was trading between 10 and 14. So I don't even know. I'd have to go look and see where I'm at right now. But it's one I'm keeping. Anyway, both of these blockchains are, if you listen to their own promotion, they are high-performing blockchains that take advantage of the Move programming language. Move is an object-oriented language for blockchain use, especially gaming and NFTs. You might say, well, is that the right place to have a blockchain that holds money and value? We'll see. Time will tell. SUI already had a problem where their mainnet was gummed up a few months ago. But I haven't heard of it happening again. And look, Solana goes down every 4 hours. I was like, who cares, right? Anyway, execution and consensus. Both chains use parallel execution to increase the scalability of the chain. One difference is that Aptos uses sequential transactions also. So heads up comparison, Aptos might be more fit for a variety of different transactions, like kind of like more global in its breadth. The simplest way to probably explain the difference is that both can open up an extra cashier at the market to speed up paying for your groceries. On SUI, they always have 6 registers open because parallel execution is open all the time. On Aptos, they have the potential to open 6 registers, but they might only have 2 open. So the meme pool could get back up and slow down the processing time or scale up slower than SUI's chain. Does that make sense? So it scales, and that scaling process might take a little bit of time. SUI has a meme pool too, just like Bitcoin does. So here it's for all the transactions to sit and wait for a validator to confirm the transaction. So in Bitcoin, you have an unordered pile of transactions. And in Bitcoin mining, when the mining rig first gets the task of the new block, it orders all those transactions by fee, right? So it quickly orders the transactions, then it fights to win the mathematical riddle, and whoever wins gets to take their version of that now ordered list, which is called the meme pool or the mempool. And that ordered list now gets propagated out to all the other miners. Everybody agrees, and then we have some verification time, and then so make it, send it, verify it, right? So this is similar to that. So SUI has a mempool like Bitcoin, but it's for transactions that are sitting and waiting for a validator to confirm those transactions, not propagating it out to the entire network. The validator would then do that. So SUI has its Mysticeti upgrade, which made it a little bit faster than Aptos. Single object transactions are moved through a different and kind of faster version of consensus. Like in our market example, opening up a line in a register just for people with 6 or fewer items. They can pay faster. They can get out of the store. Both chains, both SUI and Aptos, run very well, at least so far under the loads they've been tested. But there would be a slight edge in speed to SUI. Although Aptos, at least yet, hasn't had, at least not that I saw, any kind of degraded situation like SUI has had. So again, we're still learning pluses and minuses on these. As far as the ecosystem is concerned, at the moment, SUI lists 86 different ecosystem projects, while Aptos has 187 projects. And yet Aptos as a token is not performing as well as SUI. So there's more than twice the development going on, twice the reach, twice the participation in Aptos, a third of the market cap. And so you say, well, why is that? So on the one hand, having more in the ecosystem is a good sign of adoption, and that's what it's what you have is good for developers, and it's working well for other people. That's why they're developing in your ecosystem. But in this case, more isn't always better. It might be that better is better. So what are some of the top performers in each of these ecosystems, right? You might have 86 great companies versus 187, of the kind of companies that like Tron might participate in. Remember how Tron's #1 app was like a weather app, and that's why it was getting so many transactions? You're like, oh, come on. Anyway, so SUI has a pretty diverse ecosystem, but it's best known for DeFi and gaming. And one of the, they have Ambrus Studios, AMBRUS Studios, and it's E4C multi-platform platform, and also the industry's most popular handheld gaming device, the SUI Play OX1. SUI also has Walrus for data storage and SUI DPIN for DPIN infrastructure, which again is just another a made-up term to a-hole all the newbies into thinking that this is something new. There's DeSci, decentralized science. There's they're gonna D everything. So if you can come up with any kind of name of any kind of infrastructure thing and put D in front of it, DE, you've done it. Welcome to crypto. You can go market that. Anyway, in the growing area of AI, there's also SUI AI Launchpad to launch new agents, but not very much activity there at all. It's just kind of just getting started. In DeFi, SUI is number 8 of all the chains in total value locked at just under 2 billion. The Navi protocol is one of the leaders and a place where you can get native USDC on SUI. You notice I didn't say DT. USDT is for dummies, but USDC. Let's go to Aptos now. Aptos, the largest category in its ecosystem is infrastructure, which I like. This is a sign of how much it cares about having quality developer tools, and is something that both ecosystems have in common. The overall most valuable project on Aptos after Aptos itself is the is the Bonk meme coin. at 2.6 billion. Aptos specific apps and protocols are mostly much smaller, and that means less small opportunity, right? So in the AI and AI agent side, Aptos looks to be ahead of SUI in development, but both projects are moving fast to get working agents and infrastructure into the market. In DeFi, Aptos is number 11, only 3 spots behind SUI in total value locked at just over 1 billion. But that 1 billion is half the total TVL that SUI has. DEX and lender Ares Markets dominate Aptos total value locked, taking more than 1/3 of it. Ares pays 10.6% on USDT deposits, which is dangerously high. And the Aptos chain supports native USDT. That's pretty good for USDT holders. SUI does not support USDT, but it does support USDC. And I think that's a tactical move, because regulators, I know that USDT, the people at Tether have already bent the knee, and they're giving everyone in government back rubs. They opened up their books to them and all this kind of stuff, but they're still effing sketchy. I think SUI did this as a tactical move to appease future enforcement and regulators, things like that. I think it was a good move. So I definitely give a check mark for SUI for that. If you want more established ecosystem projects at larger values, SUI has more of them. Aptos has more small cap opportunities. On the other side of it, investment wise, Aptos probably, because those are small cap opportunities, probably good. As far as for lottery tickets, probably some good lottery tickets. I mean, on both there are, but there's probably some good ones. You could probably find some diamonds in there, just kind of pilfering through the projects over on Aptos. On the tokenomics, the first kind of major difference in tokenomics is that Aptos has a potentially infinite supply. That's a lot. That is a lot. However, many would argue, and I would argue, that if you plan, as far as currencies go, now just currencies, and this is not a currency argument, but currencies need elasticity. They should expand when the business cycles are expanding. They should be able to contract when production and growth contracts, right? Just like looking at a yield curve, you're looking at a curve of growth and inflation expectations over time. Infinity is an issue, although it rarely nukes your portfolios like Luna did a couple years ago. But SUI has a total and maximum supply of 10 billion. So that might be another reason why people are kind of pushing over towards SUI. And again, in addition to all the marketing around it. Around 50.5% of the total supply of 1.13 billion or 572 million Aptos are in circulation right now. And that's an okay number, but after almost 3 years of mainnet, we think the number should be higher, right? SUI has only 30% or 3 billion out of 10 billion tokens in circulation. Its mainnet has been live for 18 months, but that circulating supply also seems like it's a little bit too low. Both of them do they do monthly token unlocks, which is kind of the new way things work. With Aptos, it's just shy of 2% of the market cap. Okay, so they do 1.98% or 198 basis points of the market cap. With SUI, is 2.66% of the market cap. SUI has about 20% for community and staking, while Aptos has 50%. So the overall edge would go to Aptos, except for that potential infinity supply. Now, that's also something they could go and regulate. They could go in and say, well, they could go in and make some changes and say we are capping the supply, and they may do that as a tactic. So I guess they left themselves some space. The overall edge, again, would have probably gone to Aptos there as far as tokenomics, except for that infinite thing. And because of the infinite thing, you have to give the tokenomics edge to SUI by a hair. So kind of taking all this in a toto. Although SUI, by comparison, tends to win a little bit, both seem to be well-run, well-formed, quality performance blockchains. Again, we haven't seen the Move blockchains pushed really hard. I say blockchains because there's different iterations. We haven't seen them push really hard. And when SUI was pushed really hard, it broke. So again, just keep that in mind. The difference in their market values and performance really should not be that much. Their market cap should be just about the same, minus a little bit. So SUI, their market cap is around 13 billion, while Aptos is just under 5. It's like 4 and change. So these are both projects that could, I mean, I'm sure SUI will pierce the 100 billion mark. So that gives you, that's a 6 or 7x right there. Like just a straight up 60, the 7 and change X on SUI. And if Aptos got close to that'd be a 20x for Aptos. But with Aptos, you might need a little bit more patience to get there. And SUI seems to be the one that everybody is just courting, and this is the darling, and everyone, oh my God, it's the Solana killer. Solana's like, wait, what? We're still trying to kill Ethereum. You can't come kill us. Like, yes, we can, because all you are is meme coins and snakes. Yes. So that's kind of the breakdown there. That's the breakdown. Now I will go through. Let's see. I was invested in Luna. Got out before. Oh, good. No one should be listening to Tika. Dude, that guy's on the edge of going to prison. I don't know why anyone takes any of his advice. This is a guy at one point that said there were 100 million Bitcoin. This is how little this guy knows. You realize this dude he reads off a teleprompter. He doesn't know shit about crypto. I mean, he knows nothing. He admittedly says he knows nothing. He said it over and over. I don't know why people listen to anything he says. He has writers pay him. They pay him. He's just a guy that gets in front of a screen. He reads a teleprompter. That is it. And he's a dick to work with, too. I know some guys that film for him. They said he is the biggest asshole ever. He's a complete prick, and he doesn't even invest in the projects he pumps. So, which I guess is good because that would be sketchy. But the guy's not a believer. He does not believe at all in crypto. He might not even own any crypto. I mean, there's a good chance he owns nothing. But on the other side of it, any of you guys who were investing in, this is not a Tika thing. If you were investing in Luna, you were getting really bad information, or you were just making bad choices. The Luna UST math never made sense. And I know what you're going to say. Oh, I was doing what would dummies do. No, you weren't. I know a lot of people, even some of my own clients, were like, I'm getting into Luna. I go, why? Oh, well, man, the gains, these gains. Why? It's a scam. It's clearly a scam. The math doesn't work. It will die. And it died. Do you guys remember that Jeff Snyder and myself and Emil Kalinowski, we did a show about how algorithmic stable coins don't work? And then 2 or 3 days later, Luna collapsed. It was awesome. It was so good. It was so timely accidentally. Anyway, so those of you that were in Luna, you say, oh, Raoul Pal told me to do it. Oh, did he? Oh, Mike Novogratz told me to do it. Oh, did he? Anyway, you got to stay frosty, man. It's dangerous out there. Okay. Yeah, Weiss Ratings. That guy disappeared. You know, the guy that ran Weiss Ratings, didn't he have to deuce out because he went all psycho? Yeah. If you got out a week before, you got lucky because you sure didn't have a come to Jesus moment, even though everybody else was screaming it like math, because math. No one can promise you, except for the U.S. government, no one can give you 20% on your U.S. dollars except for the U.S. government. No one. It is impossible, as in not possible. Like Common sense. No one can guarantee you anything more than junk. 6%. Anything more than 6. You gotta go, whoa. You just have to ask, how are they doing it? I know Weiss Ratings is still there, but I think the guy got in trouble, got in some kind of, was it him? It's either him or somebody like that. I think it was him or somebody attached to Weiss had made some real weird statements, and he kind of like Me Too'd himself. Like really kind of creepy political statements. Anyway, yeah. He was defending Tika. God. And defending Tika. What a great way to lose a lot of money. Anyway, okay. I got to go through the sketchy news because it's so good. Okay, let me switch. Okay. I'm gonna try to go fast, but there's a lot of sketchy. Here, we'll go here. Okay, sketchy news. Okay, here's a breakdown. Bitcoin Jesus, Roger Ver, will not be getting a pardon from Donald Trump. Basically, it comes down to when Elon Musk looked at this, he said, well, we'll look at the situation. Roger Ver did some big video, comparing himself to the founders of America, except Roger Ver relinquished his U.S. citizenship like a decade ago, but he failed to declare his assets correctly. And he had 2 U.S. companies, and he failed to declare those 2, and he failed to pay taxes on them. He owes a lot of taxes, like $46 million. And then he tried to dodge that. And then they caught him. Tax evasion. Your ass is going to jail, bro. Stop it. He's like, you pardoned all these other guys. Can you pardon me? They're like, no, you're not getting pardoned. You're not even an American citizen, you dick. And then not Trump, but Elon Musk was like, no, guess what? Membership has its privileges. So don't relinquish your password. Okay. Late January 26th, as you guys know, 2 days ago, day and a half ago, the deep seek stuff came out. It nuked a bunch of projects. It nuked for a while prices in the market. NASDAQ, everybody's like, oh no, we don't need to buy all these chips from NVIDIA because you can make a $6 million large language model. Yeah, if you plug it into everybody else, you can do that. So anyway, late on the 26th, BTC's token price sank below 100K. Remember, last Friday we talked about what was the max pain point? 98,000. Don't you think it's interesting that less than 3 days after we said that, the price just mysteriously went to 97,700? Wow, what a weird thing that the bookies in the options markets make the most money around 98,000. Who could have imagined? Like, come on, man, God, this shit writes itself. Anyway, Trump took the oath last week. There was a swift plunge, falling from 105,000 to 97,700 in about 12 hours. The price briefly rebounded to 102, and I think what are we at now? Right around 102.2, 102.3. So we're a little bit in. It's not much of a rebound, 2.5%, but whatever. Anyway, so here we are. So the sell-off had mirrored this kind of greater plunge in the broader tech sector, due to all this kind of stuff. Then you had all the BTC maxis, the orange pillars, got all pissed off because when Trump issued the executive order, it instructed his new crypto council to evaluate the potential creation and maintenance of a national digital asset stockpile. Now, I have good information. Trump didn't do that to snub Bitcoin. He just did it because digital assets sound less like you're orange pilled. Trump is orange pilled. This is still all about Bitcoin. The more I read into it, I don't think it's going to be a basket of assets. That doesn't make much sense. I think it's still Bitcoin Reserve, but Bitcoin Reserve sounds a little specific towards one project. Anyway, the Bitcoin maxis were pissed off. They're like, wait a minute. Then you have all this news that Brad Garlickmouth and all his dickheads have been rolling in there trying to pay off any, of course, after they put $26 million in the hands of loser Kamala and bet the wrong way against Trump. They've been going in there and giving any money to anybody who will listen, saying, no, we need to have XRP in there and other assets, not just Bitcoin. Let's get past this. And people are like, dude, you're a criminal. Shut the fuck up. But anyway, so they've also been catching a lot of hell for Brad Garlinghouse's little sketchy ass tweets like, oh, let's all get together and be kumbaya. BTC maximalism is the enemy of crypto progress. And they're like, shut up, dude. Scumbag. Anyway, so Brad is scumbagging it, but now he is, a lot of people have turned against Ripple and XRP on this issue specifically. And I don't think it's a good idea for Ripple to make any more enemies. They're still in court for basically fraud. So it's like, for many reasons, I'm starting to think that this won't be a made in the USA. And by the way, that's another thing. We'll probably talk about that tomorrow. But if there is no made in the USA stockpile, if this really is just a Bitcoin stockpile, which I believe it is, that means there could be a big come to Jesus with all those other tokens if that is clarified. They come out and say this is a Bitcoin only, which I think they will. A lot of projects are going to shit the bed. And fast, because a lot of it's just hype and hopium. Anyway, so the fact that the word Bitcoin wasn't mentioned freaked a bunch of people out, including Michael Saylor. So a lot of people got freaked out. Then a guy later that day tweeted that he had just spoken to Trump, and he had allegedly told Bailey that he's with us 100%. We're going to send Bitcoin to much greater heights, and we're going to outcompete China and other countries that want to take it from us. Bailey added, I don't think he's aware of the concern over the non-BTC stockpile language. So Trump, I think Trump is orange-pilled, and I think that's that. I just don't think the XRP thing, I don't even think, maybe not even Ethereum, I think it's just Bitcoin. Anyway, so of course, when this was brought to Garlinghouse's attention, he immediately pivots, starts attacking the BTC maxis, saying it's maximalism, that's the enemy of progress, and you guys just don't see it. And I was like, no, dude, it's fucking criminals like you that are the enemy to progress, Brad. You and Chris and your little den of idiots. Anyway, not all of them are idiots. David Schwartz is not an idiot. He's just a creep. Although he hasn't created anything valuable in like 10 years. Jed McCaleb did all this, not Schwartz. So it's like, is he as smart as we think? He hasn't done anything. I don't know. Anyway, meanwhile, observers tend to point out the hypocrisy of all these stockpile reserve boosters cheering the government for confiscating assets. So they seem to be ignoring the fact that, one of the ways that the coffers of this stockpile will be filled is because of the civil asset forfeiture laws, which allow the government to kind of take your stuff and then puts the onus on you to prove that it wasn't involved in criminal activity, which, how do you prove a non-thing? How do you prove there's no God? You can't prove the non-existence of a thing, because someone will say, how do you know? Like, I don't know. How do you know? I don't know. You can't prove a non-existent thing. So, what is it? Non-existence of proof is not proof of non-existence. Anyway, so yeah, civil asset forfeiture. So until that kind of thing gets looked at some congressional level, I don't know, man. It could still be weird. Okay, taxing. So America's kind of the crypto community, the crypto bros, buzzed over the weekend due to a report that claimed that Trump's son Eric had let it slip that U.S.-based crypto projects wouldn't be subject to capital gains tax. Now, this is the projects. This is not, and this would enhance or entice building inside the United States. That's, as far as I understand, that's not you selling Cardano or you selling a U.S.-based project. This is for the companies themselves. That's to inspire growth and build and people coming back to the United States. However, Eric has not yet repeated this assertion to anyone other than the author of that one specific report, who, as some were quick to point out, was a crypto influencer who had previously promoted a number of what were eventually exposed as fraudulent crypto projects. So we should not listen to that. And we wouldn't even know what it means, because amending tax codes requires Congress. And they might not like the idea of lowering or losing their tax base or revenue at a time when paying down the national debt is kind of an urgent matter that's in like public discussion, discourse. So Congress also might not want to lower taxes on a bunch of companies full of kind of really rich douchebags that they're not big fans of, that, remember, they were just fighting against a few months ago. So I don't know. I don't know what defines also a project as being US based. What does that even mean? Everybody's everywhere. So maybe where they're incorporated? I don't know, man. So there's going to be a lot of infighting between stakeholders, and this is going to be a mess. A more definitive statement came from David Sachs, which is Trump's new AI and crypto czar, who last week told Fox Business that many tokens like the Trump meme coin issued by the president-elect before his inauguration they're not securities nor commodities. They're in the collectibles category, like non-fungible tokens and meme coins. Cool, except collectibles language is tricky because, like Coinbase said, these are digital Beanie Babies. Yeah, okay, but under the current U.S. tax rules, any capital gain from selling a collectible is taxed at a maximum rate of 28%. So sellers might also, it's higher than long-term capital gains. Sellers might also be hit with a 3.8% net investment income, depending on the size of their gross income. So a lot of crypto collectors, well, maybe they should, this guy says, maybe they should start collecting Tylenol, because that's what they're going to need. Okay. All right. Crypto tax concerns are also weighing heavily on MicroStrategy. So according to the Wall Street Journal report, MicroStrategy might owe billions, around 19 billion in unrealized capital gains on the company's 471,000 plus Bitcoin stash. And this issue solves the corporate alternative minimum tax. It involves the CMAT, the corporate alternative minimum tax, in the Inflation Reduction Act of 2022 that could compel MicroStrategy to pay 15% on its adjusted financial statement income. So what happened is, this is pretty funny. MicroStrategy, a couple of these other companies, wanted to be able to report these gains as part of their profit, even though it's an unrealized gain. The government said, cool, if you're going to report it, you're going to get hit for tax. Like, you can't have both. They're like, oh no, it'll be fine. Well, it's not fine. So in December of 2023, the Financial Account Standards Board, FASB, changed its rules to allow companies to report changes in the fair value of digital assets they control. So this was an accounting perk that both Coinbase and MicroStrategy had openly and expensively lobbied for, like envelopes, the kind of envelopes that Ripple passes out, right? Which is a lot of them. So they were, come on, please, let us do fair value. Let us do fair value. Right? Allowing them to report fair value. So Coinbase used this change. Why? Because it's publicly facing. MicroStrategy, publicly facing. So they want to keep their stock up, right? So Coinbase used the change to add 737 million to its profit in the first quarter of 2024. MicroStrategy, which hoped that this mark-to-market value of Bitcoin would speed its inclusion into the S&P 500, didn't implement the change until January 1st. But then immediately warned investors that the future tax implications could be massive without a crypto carve-out. Meaning, oh, don't count crypto. It's like, well, wait a minute, MicroStrategy, Europe. All you are is crypto. There is nothing else there. There's no other business. So now the fair value chickens are coming home to roost. So earlier this month, MicroStrategy and Coinbase filed a joint letter asking the IRS for an adjustment of the CAMT rules. The companies claim that the CAMT, as written, could result in serious unintended consequences to U.S. corporations holding substantial cryptocurrency that is appreciated in value, which is kind of bullshit, because no, not if those companies aren't using it to inflate the value of their companies. But these guys wanted to do that. Now that they get to do that, they're panicking. So while both Saylor and Coinbase CEO Brian Armstrong have Trump's ear, tax changes are an issue not for Trump. That's an issue for Congress. Again, the same Congress that might not want to strip the government coffers bare to favor some already stupid fucking rich, wealthy tech bros, including one Michael Saylor, who already has a record of tax dodging. This motherfucker already settled the dispute for hiding $100 million in taxes. Already. I think he paid $40 million on that. But like, you're asking super rich tax dodgers. They're the ones saying, "Hey man, can you hook us up? Can you let us carve out crypto from those reporting?" Like, but wait a minute, but you're using it to bolster your income. You can't have both, bro. You got to pick one. They actually petitioned for this, and now like, does no one have like even 5 seconds of game theory? Like, come on, man. This is like the snakes all over again, right? Like in Bangladesh. Anyway. Speaking of tax evasion, that leads us to Roger Ver. Obviously, Roger Ver, please, man, don't let me out, man. Let me get a pardon me, bro. 48 million in tax dodging. You're not going anywhere. Again, he did this big video and there was music and all this. He's comparing himself to one of the founders of America, and he's like, "Oh, it's because of my activism and maybe because of my lisp, and people hate me, and this is warfare by law, or I'm a victim of lawfare. People who hate America." Really? I don't think everybody at the IRS hates America. I think they just hate people that fucking lie and cheat and steal and then denounce their citizenship and be like, "Get out of jail free." No, bitch. Because when you denounce your citizenship, you still have to claim, like, on your way out. When you're an exiting U.S. citizen, you're required. This is why when I was in France and I was in the military, I didn't renounce my citizenship. Still a U.S. citizen, but you're required to pay taxes on your way out the door. If you evade this obligation by lying to the accountants preparing your declarations regarding your BTC holdings or your 2 companies that are U.S. registered that are required to pay taxes, doesn't matter what your citizenship status is. You owe the money, dummy. He also owes like another 40-something million to 2 other companies that he stiffed. So anyway, he ain't going nowhere. And wherever it is, it ain't good. He owes CoinFlex $21 million, can't pay. Well, he didn't want to pay. He owes Genesis Global that went under 20, more than that. It's like 26 million. It's bad. Anyway, who knows? Maybe he ran out of money. You know, he was part of the big Bitcoin ABC thing. He's like, "I'm selling all my Bitcoin. I'm going to buy Bitcoin Cash." That did not work out well. So, yeah, we'll see. Anyway, then you had that douchebag Robert James Schuler. He is the scumbag of all scumbags. He had that Hex protocol Ponzi scheme. He's on the run from the U.S. government as well as the Finnish authorities for gross tax evasion and also beating up some 16-year-old, pulling him into an elevator, stomping him, punching him, like dragging him by the hair. Like, it sounds like some gay lover quarrel, but whatever. Who knows? Still, no one deserves to get whooped by a fat, gross, douchebag, scumbag thief, which is what he is. So, yeah. All right. So, he ain't getting no pardon. So, and then I guess finally, Congress, they're opening up probes into Operation Choke Point 2.0, the conspiracy theory, which is no longer a conspiracy theory, about the Biden administration pressuring, as well as Elizabeth Warren pressuring banks to debank individuals involved in crypto, as well as pressuring the FDIC to actually shut banks down, which it did. I don't know that people will ever go to jail on this. There'll be fines handed out. People should go to jail, but they won't. Elizabeth Warren probably should be indicted, but she won't because, you know, everybody's horse trading. My guess is her name will be left out of all this kind of stuff, even though she looks directly responsible for at least 2 bank failures, maybe more. We'll see. Anyway, Senate Banking Committee announced it will be holding a focus on debanking. And then Jamie Dimon came out and started like backing up, like, whoa, it's not us. It's just that regulators put a lot of pressure on us and they tell us what is high risk. And if we don't debank someone and something goes wrong, we could pay millions, hundreds of millions in fines. So a lot of banks are like, we should just get rid of these people because if we don't get rid of them, we're going to get fines. And, you do see that over and over, basically meaning that Chase 100% has participated in this choke point 2.0 debanking bullshit. Because otherwise he'd be taking stabs at it. He was like, oh, there should be far cleaner lines about what we can do and what we can't do and all this. But we've been complaining about this for years. Like we're on your side. Shut the fuck up, Jamie. Like he's on our side. Get off the gas. Anyway, he's like, we need to fix this but it's different than like what Mark Andreessen spoke about on Joe Rogan for different reasons. Jamie, shut the fuck up. What a scumbag, man. So, anyway, to paraphrase, if crypto firms can demonstrate the same commitment to observing know your customer and anti-money laundering like traditional financial operators, then they should be able to enjoy the same banking privileges. Right now, they kind of don't do that, and so they can't get those privileges. But banks can. So you got Morgan Stanley. So CEO Ted Pick says his company is interested in working with regulators to see how they can stick their fingers in the crypto pie. He said the equation is really around whether we as a highly regulated financial institution can act as transactors in digital assets. Morgan Stanley would work with the Treasury Department on those, whose new secretary, Scott Bessent, is a crypto fan, and he was confirmed by the Senate on Monday. And so they're going to work with other regulators, see how they can do it in a safe way. His statements are similar to Bank of America's Brian Moynihan, who said last week that if the rules come in and make digital assets a thing that you can actually do business with, you'll find the banking system will come in hard on the transactional side of it. I bet we see crypto and Ethereum being able to be custodied at banks and lent against, because they're not going to let private companies do all the lending. That's no way. They're not going to give up that market. That's their whole thing. That's banks' entire thing. So when that happens, I also saw something yesterday about these. Max sent that to me. That there's a company that's launching three Bitcoin products. They're exchange traded products which basically let you have exposure to Bitcoin, and you can either have 100% guarantee on the downside with a 10 to 20% upside. You can have a 90% guarantee, meaning you can only take a 10% hit on the downside with a 30 to 35% upside. And the other product is 80% protection, which gives you a negative 20%, is the worst on the downside, but you get up to a 50% on the plus side. So it's these, and they do it with this kind of really intense option strategy. It's pretty cool. I don't know how excited people are, but you might see a lot of people that are like, I just don't want to get my ass kicked in Bitcoin. But if you can guarantee me, I'd be willing to take a chance on 10 to 12% this year if my downside protection is 100% downside protection. So basically you look at your wallet and say, if these guys give me 100% protection, why the fuck would I invest in anything else? Like, think about that for a second. 100% downside protection in Bitcoin. There's no excuse not to have it. I don't know. These kind of products are very interesting to me. They work until they don't, right? So it's pretty cool. I'm curious to see what that kind of uptick is. Woo! Some good sketchy news, right? Man, that was a real weenie shrinker. And just for those of you, look at that Jupiter. You can't keep a good girl down. Boy, that trade worked out. Holy smokes, that trade worked out. And JLP also not doing too bad. Look at that clean green sheet. Look at Jupiter's clean green sheet. Well, Jupiter, you get the zero because the 1 year is not. But you have to go Monero. Isn't that crazy? Monero's got a green sheet. XRP's got a green sheet. It's up 8% today. Why? Because people think it will be included in this kind of stockpiling thing, which it won't. If you don't get on Twitter or whatever we're calling it now, ecstasy, Don't get on there. If you're an XRP fan, they are getting destroyed. I mean, they are tearing Brad Garlinghouse apart, just ripping him, as he deserves. He's a crook. What else is there? It sucks, but if you own XRP, you're putting a lot in the hands of a crook with an asset that has some use, a little bit of utility, no wide-scale adoption, but it does have hoarding effect, and it does have what would dummies do. Well, those are, and real quick, JLP is not comparable to Ethereum. You can't. It's a basket of assets. I just think that's a flawed comparison. It's not a layer one. It's not a protocol, so it's not. You can't. You're comparing apples to like lumber. I mean, they're both made of atoms, and that's about it. Okay, let's call it a day. We'll see you tomorrow. I'm sure Brandon will have some cool stuff to talk about. Stay in school. Don't do drugs. Don't do anything I'm poor, insolvent, drunk, strung on meth. Grandmother wouldn't do, which is very little. Brandon, I don't know what the temperature is there today. We're going to be, okay, low 60s. It's not horrible. It's not horrible. It's not the California weather I'm used to, but it did rain for the last couple of days. So at least we're going to shift to landslides rather than fires. So that's good news.
Terrified, wandering mind, the seams have come undone. You've been telling lies to these eyes as if they'd never seen the sun. Now you've let your guard down and your heart is exposed. Now you've let your guard down, but how could you have known that I'm the big fish round here? You're a small fish. I could make you disappear. You should know this. I'm the big fish round here. You're a small fish.